Office vacancy rates are climbing in cities across the country as companies increasingly opt to continue on with remote work. That's leading to growing signs of distress for mortgages on office buildings. Let's bring in Rebecca Rockey. She is Global Head of Economic Analysis and Forecasting at Cushman and Wakefield. She joins us on the phone today. Rebecca, it's good to have you on today. We saw a note out from Barclays that essentially said the share of problem mortgages are at the highest level since the financial crisis now. What are you seeing in the market?
Sure. So I think as it relates to the fundamentals, we're still continuing to see a correction that is ongoing for office, although it's really trailing off. And we've seen a number of markets, in fact, turn the tide, so to speak. And by that, I mean, we've seen them move into a territory of positive absorption and, significant accelerations in leasing activity and so forth. But of course, we're still dealing with an ongoing supply wave, which was ramping up just before the pandemic and of course is now finally coming to the market. And so even in some of those markets with positive absorption, for example, you can still see vacancy going up because of the amount of construction hitting the market. We do expect nationally that inflection point will happen this year, so that demand will sort of stabilize and start to expand again. But we're still in that transition phase. And this is really the only property sector that's still in that phase.
Rebecca, it's Brian Chung here. Great to speak with you. Have there been any sort of structural changes during the pandemic to the demand here? Because we know that a lot of offices have anecdotally spoken about wanting to downsize simply because of this hybrid situation that's likely going to be a more permanent feature of our work culture. On the other hand, though, you have companies that are effectively locked into leases that they signed pre-pandemic that are multi-decade here. So how structural has the pandemic been on office demand from your view?
Yeah, I think, it's sort of a difficult question to answer because something we observed throughout the pandemic and really for the first half of 2021 is companies still had a lot of uncertainty around their future office plans in general. And they were really focused on the safety of their employees, making sure that any kind of return to office plans were things that people felt comfortable with. And so, kind of thinking about long-term leases and workplace design and all of those things, while some companies were positioned to be going there, it was certainly not the majority of them. And I think what was exciting about the second half of last year is we did start to see a return of conviction with, kind of 10-year or longer leases going back to sort of a normal share of leasing activity. We started to see activity really pick up. As it relates to structural factors, we certainly do see a movement that is really going to be here to stay towards flexible work. We do believe that will affect what we call sort of the marginal effect of a new office job on office demand. But the other thing that I think is important and we found was significant in our analysis has been that office jobs really are an outsized share of all new jobs, right? So they're about 20% of all jobs nationally, but they make up well over 20% of new jobs. And that tends to be an offsetting factor. And indeed, that's why in many cases, in fact, in about 25 of the 90 markets we track, we actually started to see positive absorption last year. And it was really on the back of these labor market tailwinds.
So it sounds like you're saying the vacancy rates we're seeing right now is more of a temporary lull. I mean, we've had so many conversations about whether, in fact, you're saying office jobs are making up about 20% of some of the listings we're seeing. And yet we're also hearing employees increasingly going after those jobs that allow some flexibility and remote work, which would suggest that you don't need as much office space as we had pre-pandemic.
Yeah, I think, it's sort of, they're not mutually exclusive, right? So we saw a massive correction in the market in 2020 and it really throughout 2021, and it was more significant than anything we've recorded before, but that's largely tapering off and becoming more isolated to fewer and fewer cities. So nationally, we are starting to see, the green shoots translate into the positive fundamentals that will cause vacancy to stabilize. Recording positive absorption and accelerating momentum in the market is not mutually exclusive in our view from also acknowledging that companies are going to change the way that they work, the kind of role that the office plays. We've certainly seen a focus on high quality, a richness in amenities, really finding space that makes people excited to come to the office. And what we've also seen is, the desire to work from home is there for sure. That's not going to go away. But when you still have most people coming into the office on certain days of the week, you maybe can't downsize to the degree that you thought you were going to, or you're changing the way that your space looks. So maybe now you have more collaborative space or meeting space than you did rather than assigned seating. And so we're seeing a lot of these shifts still play out. I would say it's very much a trial and error phase. But I think the best news that we've seen and continue to see in the data is the tide is turning. We've gone through a pretty tough period the last 2 years. And we believe that, with this wave of construction that hits this year, that will sort of be the peak for vacancy. And then we'll start to see the improvements. But certainly, there's a lot of variation by market. And we do think that work from home impact is there. We're totally not denying that is definitely going to be an influence moving forward.
Yeah, certainly. The world very different in 2022 than it was at the beginning of 2020. But Rockey, Cushman and Wakefield, Global Head of Economic Analysis and Forecasting, thanks so much. And Akiko, I just want to point out very quickly here, I'm in the office right now, but you are not. So I don't know. How excited are you to come back to the office?
I feel like I'm getting called out for not being in the office, right? I'm excited to go back into the office. I am curious how the lack of flexibility is going to sort of affect this schedule that we've all become accustomed to over the last 2 years. And I think, maybe our newsroom, like many other newsrooms, is very specific in that we operate off of collaboration. And so it helps to all be in the same room. It's interesting, Rebecca noted that the experience could be a little different, no assigned seating anymore, which, by the way, Yahoo Finance is also following in. So I'm open to the experience. I'm excited to have everybody back in the office. But what about those days where I want to do some other things and have the flexibility to be at home so you can multitask? Not sure how I'm going to feel.
Yeah, day one when you come back and you already have to deal with me for more than 1 hour a day in person, then maybe you're going to want to go back home pretty quickly. But we'll have to see once we do get back to the office.
No, Brian, I like being in the same office, right?
Aww.
And we talk so much more often when we're in the same room. It's going to make for a better show.
Write that down. If someone can kind of put us next to each other, we can be best friends. Akiko right next to Brian.